What is happening, investors? It is your boy Jack. I'm not a financial advisor, and today we're going to be speaking about the stocks that I personally went ahead and picked up this week. I know there's a lot of people sitting on the sidelines. There's a lot of people afraid to buy stocks right now. A lot of people don't know where to put their money, so I'm going to let you know exactly where my money is going. I personally went ahead and added about $550 into the market this week, which for my portfolio is, a decent amount. And you will see a theme in today's video, okay? Right now, there's not a lot of places I'm extremely comfortable investing in. There are a few sectors in particular I really would like to see some red days in before I decide to go and invest. But as a long-term investor who does dollar cost average, it makes sense to keep putting money into the market. And this week was pretty much all about the big tech companies. I'm speaking the FAANG Stocks and I'm speaking Microsoft. It can be tough to find a good deal right now. I think we all know that. Unless some really big news comes out as of late, or unless you're in a penny stock, it can be hard to see any big movements lately. Spotify, for example, just signed a deal with Kim Kardashian, absolutely massive news, and it shot the company's price up. And again, I'm finding myself in a position where I'm kicking myself for not buying a company that I believe in. So I am becoming more and more inclined to invest in these companies, even if I believe that they could, in the short term, go down a little bit at some stage. But anyway, we're going to get into the 5 companies that I did go ahead and buy this week. And right before we do, can I ask you to please smash a like on the video? Genuinely helps me out massively. Yesterday we hit over 8,000 subscribers. The final stretch of this 10,000 is on, guys, so please help me out by smashing that like button. And of course, if you're new around here, hit that sub button too. We are getting so close. I really want to keep this momentum going. I appreciate you all so much. And lastly, drop me a comment down below. Let me know if you bought any companies this week, what they were, your reasoning behind it. It always helps me. It gets more ideas going into my head. So with all of that being said, guys, let's get straight into the first company of today. So we are going to start this off with Facebook stock, okay? And I went up and I picked another half a share up, which puts my total position in Facebook to 3 shares, which actually makes them the biggest position in my portfolio. So if you're a long-time subscriber, you know exactly how I feel about Facebook, and you know just how much I love these guys. If this is one of the first videos of mine you've ever seen, you may not know I have a 15-minute video speaking all about Facebook and why I love them so much, so I will leave that in the corner right now. I'm not going to speak about the fact that they own WhatsApp, a social media platform with over 1.5 billion active users that is not monetized just yet, but is on the way to being monetized. I'm not going to speak about Facebook's immense growth to a stage where they have over 2 billion monthly active users. And I'm not going to speak about the fact that they're going to be letting their employees have the option to work from home or to go back to the office once this whole virus is over, which are all absolutely fantastic points and are all the reasons I am buying Facebook, but I mentioned all of them in that previous video. There is some somewhat prominent news that I want to touch off in regards to Facebook, and a lot of it is regarding politics, and specifically ads in regards to politics. So this video has resurfaced as of late, okay? It was from Sacha Baron Cohen, one of my favorite actors, comedians in the entire world, the guy who plays Ali G, who plays Borat. And in the end of last year, he basically went on a bit of a rant saying they would have let buy ads, and he's speaking to social media sites including the likes of Facebook. Facebook has come out recently and they have added the option for US users to turn off political ads altogether. We've seen this happen loads of times for Facebook. Somebody's not happy with an ad that shows up. Somebody's not happy with the data that Facebook collects. They always implement an option to fix the problem at the snap of a fingers. I've just seen a few people bringing this up as a really bad point, and I don't see how something like this would have any sort of a decent effect on Facebook's pricing. If you buy Facebook, you know what you're buying, and you know they make money through advertising. And some of the biggest advertisers for these guys are political parties. It is that straightforward. And they're even giving you the option to completely turn off political ads if you don't want to see any. So I just wanted to touch on this point. It means nothing to me. In my eyes, it's genuinely irrelevant. They've handled the situation straight away, as they do with any obstacle that's ever been thrown their way. This may have some sort of a small negative effect. They may lose some sort of money on advertising, but it's not going to run Facebook into the ground. Current assets, over 69 billion. Total assets, 138 billion, okay? Current liabilities, 15 billion. Total liabilities, 33 billion. I mean, guys, they have more money than they know what to do with. And if they ever need more money, they have more than enough avenues to monetize the services they already have readily available, with literally billions and billions of monthly active users. And earlier on I said that as of right now, WhatsApp was in no way monetized. Well, Visa to power new WhatsApp payments feature in Brazil. So they are beginning to monetize WhatsApp, which is very exciting. Obviously, they're not going to do this for free for the sake of it. So what it looks like to me, what I can gather as best as possible, is they're trying to create something like Venmo or Revolut. And they're using an already established app to do so. They don't have to make a new app. They already have the audience. They're just adding features to that particular app. So I would assume that a place like Brazil must not have a Venmo or a Revolut or some sort of other really easy payment method. And Facebook have decided, bang, I'm getting in there. And what's double exciting is I'm invested in Visa as well and plan on picking up more of them over the next week or so. So this is a win-win for both of those investments. But essentially, Facebook, they're always doing something new. On the 6-month chart, they're still up over 14%. The 1-year chart, 25%. The 5-year chart, 185%. And the max stock chart, since they went IPO in 2012, over 500% return. I mean, guys, the numbers speak for themselves. The way they handle situations speaks for themselves. That is why they are literally my favorite company to invest in, and that is why they are now the biggest position in my portfolio, second to none. So speaking about Visa, they are the next company that is making today's list, okay? And again, I went up and I picked up half a share, and that brings my total position in the company up to 1.5 shares. I only bought these guys for the first time, I think, last week, so very new position in my portfolio. But it's just another company who, from a practical sense, is very easy to understand, and it's very easy to understand why they could do very well. With Visa, I am going to start with the balance sheet, okay? Current assets, nearly 20 billion. Total assets, over 72 billion. Current liabilities nearly 16 billion and total liabilities 38.2 billion. So from both a short-term and a long-term point of view, in a very, very good position. And I actually think the price point that they're at now is very good, to be completely and utterly honest with you. They're still down about 9%, and the Dow is still down close to 12% from the 6-month highs. Now, before the Roni situation even happened, the world was moving online, simply put, and that plays a big part in a lot of the companies I'm buying right now, and it's no different with Visa. But, as well, one of Visa's top executives say we'll never go back to using cash in the same way post bad old Roni virus. And I think that is common sense, you know. Right now, everybody is paying with their card. You know, we're either tapping our card, we're paying with it. Not a lot of people want to carry cash around right now because we understand, you know, many people will have touched that before us. And in a world of social distance, we were all afraid of catching this virus. Who's carrying cash when we can just use our card? I don't even carry a card. I literally pay for 90% of things with my phone, which uses my Visa card. It's a massive company in a market that would be extremely hard to get into. Their main competitor is MasterCard, who I also think, you know, could be a decent investment, but Visa does take the pick for me. And look, both Visa and MasterCard are doing very similarly, okay? But Visa does have a much bigger payment volume, okay? Their revenue growth year over year, a little bit smaller. Their operating income growth, a little bit smaller, but they are the bigger company. But again, both of these I would be quite confident investing in. I just prefer Visa. Keep in mind, they are still down 10%. If we look at the last year, okay, the last year, they're actually up 13.6%. The last 5 years, okay, this is when the growth gets beautiful, up 182%. And on the max stock chart, we go back to 2008, the growth is over 1000%, guys. So these guys, if you've been in them for any considerable period of time, there has been some absolutely immense growth. And again, just from a practical point of view, this immense growth, obviously, you know, the world has been moving online. There's been way more card payments, things of the like. But cash has been a very real thing this whole way up. And slowly but surely, cash is becoming less and less relevant. So I personally see no reason for this growth to slow down. I know their PE ratio is close to 35. For the last few years, their PE ratio has been in and around this range, okay? And this whole time, their EPS has been going up, and their stock price has been going up. So personally, I feel like it is justified. I mean, at their IPO, they were nearly at a 40 PE ratio, you know? It did go down for a while, it shot up absolutely massively, it's been a bit sideways, but this PE ratio, it's somewhere around where it generally is. Just another company who is quite easy to understand, and it's quite easy to understand how they could keep up this sort of level of growth, and I 100% believe that they will in the long term, so I'm very happy to own them. Next up, we're having a look at Microsoft, another company I went ahead and picked up half a share in, bringing my total position in the company up to 2 shares. So another company I do really love, another relatively new investment for me. And on the 6-month chart, we can see that Microsoft is actually up 26%. On the 1-year chart, nearly 45%. The 5-year chart, 325%. And if we go back towards Great Recession times, let's just say they're up over 1000% in a matter of just over 10 years. So another company that just has absolutely immense growth history and immense growth potential. In Q1 2020, the number of bullish hedge fund positions on Microsoft Corp increased by about 24% from the previous quarter. Yahoo Finance, okay, their calculations show that Microsoft Corp is ranked number 2 among the 30 most popular stocks amongst hedge funds. Hedge fund managers hedge fund analysts are very, very smart people. A lot smarter than me, or about 99% of people watching this, unless you're a hedge fund manager, which I doubt you are because you're a very busy person. And another cool thing, something that Facebook's doing, a lot of social media companies, a lot of tech companies in general are saying that the shift to work from home amid the pandemic has bolstered its bottom line. So Microsoft could be the next company who allows their employees to keep on working from home even when the virus is completely gone. And this is quite cool, okay? Their cloud computing service Azure, its gaming systems and Windows have all seen increases amid the work from home shift. So more people working from home will mean more people using Microsoft services, okay? Customer upgrades of their devices has increased and use of Windows Virtual Desktop has tripled. I've just looked into it a little bit more and Microsoft have only told employees they can keep working from home through October, so maybe they won't actually be keeping it up after the pandemic. But anyway, it's not the biggest deal in the world. Hopefully they will. But ultimately, the likes of Facebook allowing their employees to keep working from home even after this virus is completely gone will be a very good thing for Microsoft. These people will need upgraded computers. They will need a lot of services that Microsoft offers. So next up, we're having a look at Amazon. And Amazon is a company who costs $2,653 a share. I don't have that kind of money. Thank goodness for fractional shares. So I literally went ahead and I picked up 0.04 of a share for about $100-ish, something like that. And that brought my total position in the company up to 0.15 of a share. One day, I will own a full share in these guys. One day. Amazon. Again, let's just start off with the chart and a little bit of a practical view on what they do. 6-month chart, up nearly 50% in the world we live in today for a massive company. I mean, that is crazy. Now, the 1-year chart is actually a bit worse. It's only up 40%. Still, 40% in a year. Beautiful. Now, the 5-year chart, 500%. Incredible. And again, about 10 years, over 2,000%. So another massive tech company whose growth has just been amazing. Repetition in this video over and over again. The world is moving online. People are shopping more than ever online. People need more Visa cards to go buy products from Amazon. You can buy anything from Amazon. You want a canvas of a giraffe like I have behind me? You can get that. You want some whiskey like me? Amazon sells it. You want a new wardrobe? You want a chicken sandwich? You want a microphone that I'm speaking into right now? You want a Mac? You want the desk that my Mac is on? You want anything in the world? You want this phone? Amazon has it and you can order it all at one time. First thing we'll do, look at the balance sheet. Current assets, nearly 86 billion. Total assets, 221 billion. Current liabilities, 79 billion. Total liabilities, 156 billion, okay? So long term, very good. Short term, absolutely fine. An interesting article, okay? Is Amazon stock worth $5,000? So an analyst called Laura Martin, on Tuesday, she began coverage of the online retail and cloud computing juggernaut, and she placed a buy rating and $30 to $100 target price on its shares, and said that it could be worth as much as $5,000 over the longer term. Now keep in mind, there is more to Amazon than just the website that is Amazon. Their media businesses, including Prime Video, Prime Music, and their video game streaming platform Twitch. You more than all likely know about Twitch. I've been thinking about setting up a Twitch lately. 100% I could see a world where Amazon hits $5,000 within, as they said, 5 years, if not much sooner. I really, really could. Nobody is going to be able to take on what Amazon does in the US, or most of the world at least. Now, there is a lot of competition over in the likes of China, Alibaba being probably the biggest name that would spring to mind. And then you have JD as well, another absolutely massive name who is getting a lot of hype behind them as of late. But if we're speaking about the US and we're speaking about Europe, Amazon is the one. Their place in the world is essentially set in stone. I can't see a world without Amazon right now. Nobody is going to be able to do what they've done. The barrier to entry is just too large at this stage. And they have Jeff Bezos behind them. The amount of money this man has is absolutely disgusting. Nothing's going to happen to Amazon with a man like Jeff Bezos behind them. Okay, so on to the last company of today. Another tech giant. We're having a look at Apple. So I picked up 0.3 of a share, added onto the share I already owned. I now own 1.3 shares in Apple altogether. Look, it's another one of the tech giants. I just don't see how things can go so wrong. Their name, their brand is engraved in everybody's mind. As I said earlier on in the video, I'm recording off of a MacBook right now. I have my iPhone off to the side of me to take screenshots as necessary. I'm contemplating buying an iMac soon. I'm contemplating buying a new iPhone soon. The brand loyalty that Apple has is absolutely incredible. I could not see myself using a phone ever again that is not made by Apple. I really cannot see a world where that happens. And I think anybody who owns Apple products understands that. We just love the way they work and compared to anything else that is out there. So, currently trading at $350. That means on the 6-month chart, they're up 25%. Absolutely fantastic. On the 1 year chart, up 77%. 5 year chart, 177%. And again, we'll take it from their bottoms from the Great Recession and we go up nearly 2,500% in just over 10 years. A PE ratio of 27.57, again, traditionally is high, but for a tech giant, not very high. We have a look at the balance sheet. 143 billion current assets, 320 billion total assets, 96 billion current liabilities, 241 billion total liabilities. Fantastic balance sheet both in the short and the long term. They're absolutely fine. They'll get through whatever they need to. So, an article from the Motley Fool. Apple stock could be headed to $400. They rose to record highs on Wednesday, a few days after the company revealed that over $500 billion were transacted over its App Store ecosystem in 2019. That's a lot of money for an App Store. The staggering figure demonstrated how powerful the company's platform has become, and it highlighted the huge market opportunity the tech giant has to further monetize its installed base of more than 1.5 billion active devices. Massive. So here's some reasons why some of the analysts think it could go up to $400, and these are some reasons that could be good for us investors, okay? The path to $400. The first one being the likely debut of new 5G iPhones this fall. Lowered near-term market expectations for Apple financial results because of the virus. Potential for market share gains. Rapid growth in Apple's wearable segment, and an acceleration in Apple's services business. Ultimately, it's just another tech giant that I would be happy to invest in and not look at for another 10 years and be confident I will come back to a considerable amount of money. And these guys do actually pay a dividend as well, very close to 1%. I know it's very insignificant, but you know, it all adds up. If you're holding for 10 years, there's 10% back for nothing. Happy days. With all of the companies we spoke about today, with all of the big tech giants, there's always going to be some sort of new news, whether it be good or bad. But I think they've all proved themselves that ultimately they're going to come out of it on top. And that's why in such an uncertain time, like the one we're in right now, I'm happy to keep buying these guys. I'm happy to dollar cost average. It doesn't bother me that I'm buying at the highs. I've bought at the highs in Google, in Amazon, in Facebook, in Apple, in Microsoft. And they're all in the green for me right now. Now, that's not to say that the price can't go down, but I just mean it's fine. They're always going to be making new highs if history repeats itself. Very rarely do we see big dips in the likes of these tech giants. And if ever we do, that's when you increase the spending, baby. So guys, that's what I went ahead and picked up this week. You know, nothing super exciting. Pretty much very safe, massive companies that you're all fully aware of. But that is what I am personally comfortable buying at the moment. You know, the market is very high. A lot of things are overvalued. Who knows what's going to happen? We could be in this massive bubble. We could see a second crash. I don't feel very comfortable putting my money into, you know, some of the higher risk related companies. So I'm just going to spend this time and spend this money investing in the safer companies that I plan on holding for 10, 20 plus years. If you enjoyed the video, again, please drop it a like. If you've watched till the end, please drop me a comment down below. Let me know what you think or what stocks you picked up this week. Those two things genuinely help the channel out so much. And I'm sure you're aware we're trying to get to 10,000 subs. So I would really appreciate it. You mean an awful lot to me. And of course, if you're new around here and you did enjoy the video, you want to keep up with me, hit that subscribe button. But anyway guys, until tomorrow's video, I hope you all have an absolutely fantastic day. Peace.